Hello traders and welcome to another video review. Today is Wednesday, August 23rd, 2023. Let's take a look at the Forex economic calendar. It looks like we are going to be busy today. Data had been published overnight in form of the retail sales and core retail sales data from the New Zealand. As you can see, for the second quarter, they beat the expectations of minus 2.6%, actual reading minus 1 and minus 1.8. So the core retail sales are slightly better than expected. Bank Japan Services PMI data had been released as well. 54.3 beats the expectations of the 53.9 and the previous reading of 53.8. So Services PMI in Japan better than expected. Germany manufacturing PMI data scheduled for release at 9:30 together with the Services PMI and the manufacturing PMI data, Services PMI data and the global composite PMI data from the Eurozone are scheduled for release at 10 o'clock. From the UK, we got as well manufacturing PMI, Services PMI, and the composite PMI data scheduled for release 30 minutes later. Then at noon, we got the European Union economic forecast. And during the New York session, we have building permits scheduled for release at 2 o'clock, core retail sales and retail sales data from Canada scheduled for release at 2:30. Then we got, of course, the PMI data. Manufacturing PMI data, composite PMI, and the services PMI data are scheduled for release at 3:45. New home sales scheduled for release at 4 o'clock, and crude oil inventories and Cushing crude oil inventories are scheduled for release at 4:30 as well. So busy day, plenty of the economic releases today, important and very important data coming your way. So please stay focused and vigilant because it looks like the volatility might increase during Wednesday 23rd of the August 2023. So because of the retail sales from the New Zealand, let's switch straight on to the 4-hour chart of the New Zealand dollar to see how this data affected the currency rating. As you can see, the movement from the lows at 5,891 pips had been completed somewhere around 5,966 pips, which is still below the 100 periods moving average. The series of the lower lows and lower highs is being continued here, so the technical trend to the downside is being continued. There wasn't too much of the rally after the data were published. As you can see on the 4-hour chart, we have the pin back candle here with a very long upper wick, and right now the next candle looks red for now, at least. So maybe this will be a confirmation candle. What this candle will confirm? The bearish pressure from the upside, because it's coming from this bearish pressure is coming from this way, 5,966. Of course, that's the level of the recent local high, and 5,959 is another level of the local technical resistance. So no breakout above this level, bearish pressure coming from this level as well. Eventually we can say that the other important level is located roughly around 5,987, but to get there we first need to break above this very narrow zone just below it. So maybe some sort of the very short-term trend line will give us more information about the current situation on the New Zealand dollar. Okay, any breakout to the downside will be considered basically bearish, and new low below 5,891 might be made very soon. So that's the level here. That's the level of the technical support. Momentum wise, we are now at the level of 52.60, which is positive. However, it's not strong. We are still kind of a hovering around the level of 50, which is of course the neutral level. So we need a strong breakout to the upside in order to reverse this downtrend, which is developing in the background. All right, so we need the first breakout above this small supply zone and technical resistances, and then hit this this level here. Let's make it green, 5,987, to test the 100 periods moving average, 6,008 pips. So that's the outlook for the New Zealand dollar. There's plenty of data from the European Union, so let's take a look at the euro for that reason to see what is going on here. And for our chart of the euro, is showing us another deep spike to the downside. This spike penetrated the level of 1.0846 and hit the 1.0834, which is, if you see from the bigger perspective, the key technical support right now on the euro dollar. So very important level is being tested right now. This was the base for that up move here, and it took roughly around 2.5 months to get the back, right, and test it. So right now we are below 50, 100 periods moving average on a 4-hour chart. We are testing this level. Slight bounce occurred already, but with the negative momentum, and basically with this momentum being so weak on the euro dollar, there is no chance with that kind of a momentum for the market to rally higher above. For example, let me make it bigger for you guys, above this level. For example, the pin bar high 1.0931, 100 periods moving average is 1.0936, so 5 pips away. Nevertheless, we still need to get there in order to reverse this up move and maybe continue, reverse the down move, and maybe continue the up move that was made long time ago in July 2023. So I'm talking about this one. And the last thing about this this chart, maybe you see it right now, but let me show it to you. What do we have here? Can you see it already? Because if you don't, here it goes. We got the of course the moving head and shoulders pattern. We had head and shoulders pattern, kind of a tricky one. It's not a textbook example, but it works. This is what I wanted to tell you. I'm just trying to be very, very precise about it, and I need this one, and there you go. So far, we hit the level of 1.0834. Nevertheless, the neckline has been violated, tested, and now we are moving lower. If we take the measure of the head as a projected target to the downside, we will definitely hit 1.0636 and below. So any breakout below 1.0862 will be considered bearish, and head and shoulders pattern will get the momentum to the downside. As you can see, it's perfect location for the head and shoulders, so there is nothing wrong here with this. Maybe maybe we should take a look as well at on the US dollar to this Japanese yen pair. Why? Because as you can see, we are trying to spot the reversal here of this up move. So we got the tested technical support located at 145.08, right? So that's the key technical support tested, and then there was a bounce, very nice bounce here. Nevertheless, as I said, this bounce lacks the momentum. Right now we are below the even 50, below the level of 50 right now on the RSI. Nevertheless, we're still hovering around this level. There's not like a very, very dynamic breakout to the downside. If we do some kind of a zoom here, we can clearly see that there is a bearish pressure. There is a bearish pressure from the level of 146.43. This is the first level of the technical resistance, and then of course the swing high 146.57. This zone must be violated in order for the uptrend to continue, because the US dollar to the Japanese yen is in the uptrend. Nevertheless, the technical support that is located at 145.25 and the lower level of this support 144.94, the spike low. If it is violated, then of course the situation is much more serious, because we might extend even towards the 100 moving average 144.43. So the outlook for the US dollar to Japanese yen looks like this. Let me just take a look at the SP 500 as well, because what is going on here, as you can see on this market, is that since the lows on the middle of the March 2023, we've been moving higher. Right, so this is definitely the uptrend. Now we have the cross of the 50 and 100 periods moving average on a 4-hour chart, and we right now trying to break below the technical support at 4,329. Okay, so this is the technical support, and today's data might affect this this index in a strong way. So there you go. That's the zoom of this recent development. We tried to test it already. 4,336 is the lowest level here. We bounced from this level, but this bounce is shallow, and this bounce doesn't actually do any damage to this movement to the downside. We bounced because we hit the extremely oversold conditions. Bounce was made towards the level of 50 on the RSI, so we can see it clearly. There you go. And there is no chance for this market to break above the level of 50 after if the level of 4,542 is not violated. So basically this is the key level. This let me just do the zone, because the zones are slightly better in that situation than the pure levels. This is the zone that must be violated for this market S&P 500 to return to the uptrend. Without breaking above this level, we cannot say that the uptrend is being continued. Right now we are in the pullback or even a correction mode. How much did we made already? Let me just take a look. Price range, we've made roughly around, yes, almost 6%. Okay, so this is a nice correction. This is not a pullback. This is a nice correction. This correction might extend lower. On the other hand, left shoulder, double left shoulder, head, we need a right shoulder and a breakout to the downside, and the perfect reversal pattern might be developing here on the S&P 500. So please keep an eye on this market. And last but not least, just a short revision of the Bitcoin, mostly because we got very interesting candle here. As you can see, long wick to the downside was made after the penetration of the area below 25,500, and it looks like someone is looking to buy the Bitcoin. However, there wasn't any breakout out of the range upper zone 26,250. So we got the first, let's say, dips buying behavior by bulls. But no confirmation to the upside has been made yet. Nevertheless, momentum is still slowly recovering from extremely oversold market conditions. So there is still open a road to the upside. There's plenty of room to the upside, momentum wise and on the chart, to retrace some territory of this down move that occurred on the August 18th. Okay, so maybe we just started this up move with this 4-hour candle made around the midnight today. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.